What you're looking at is a technology called Closerve. It's the foundation of the consumer protection platform. This version has been tested to about $10.6 billion worth of transactions, and we haven't had one instance or one inquiry of identity theft. Called Closerve. It was designed by me, and what I want to do is kind of take you through our workflow system, show you the ways that differentiate us versus other companies and how we're going to protect you. The first stop in the system, whether you are working off of a internet inquiry or whether you're calling into the grid, the first thing we do is we make sure that you are never going to end up speaking to a mortgage professional who's not licensed to do business in all states. We monitor the states, we monitor how many mortgage managers are active in the states, and we make sure it's a real problem in the industry when you start talking to guys that may or may not be licensed in specific areas. So with the grid protection platform, we never deliver a phone call or an internet inquiry from a consumer who is not being directed to someone who's licensed and fully trained to do business in that market. It's a real problem with the mortgage industry right now because it's not regulated enough to keep guys from doing business in places where they're not supposed to. Now that we've gone through the licensing association, whether you've called in on the phone or whether you've applied through the internet, the first stop is the licensing association. Now that you're a living, breathing customer, you're always associated with the mortgage manager that you contact. If you ever call the company again from a home phone, work phone, or a cell phone, then you will be directed to the mortgage manager that you spoke with before. I've always believed in what I call mortgage management and doing it with no closing costs. There was a time when people used to spend thousands of dollars in transaction fees to trade stock. And when that went away, it created many components of modern day financial management. I believe when you can eliminate the closing costs, you've opened the door for mortgage management. But you can't have mortgage management unless you have a mortgage manager, and you can't have a mortgage manager, you know, if it's like calling AT&T and you get a different person every single time you call the company. So we're protecting you right out of the gate with the mortgage management and the contact management tool, which you will live in and you will reside in. Okay? Within this, there's features, there's models that the mortgage managers will be able to show you where you can compare different scenarios with cost, without cost, what you're proposing, what you have. You know, is it worth it to spend $7,000 in closing costs to get a lower rate? Or do you want to spend 5.5%, or do you not want to spend anything and get a rate of 6%? Okay, everything's, you know, there is no set rate. It's all correlated with what you want to spend. Okay? Now that you're in here, we're creating comparisons with minimum cost invested versus maximum cost invested. In this particular customer's case, you can see it was going to take him 125 months or 10.42 years just to break even. And now your contact is living in there and your mortgage is managed. And every time rates improve, your mortgage managers will go to the contact management tool. They will scroll to see which of their customers have certain type of loans, certain type of rates, loan amounts, when adjustable mortgages are going to mature. And these customers are always coming to the forefront so that we're always on top of market movement. And the goal is that every time rates improve, to have a mortgage manager contact you. It's done without long distance, without wires. It's all done through the voice over IP. And we begin to identify key components and business rules around your mortgage and around the way that you're interacting with your mortgage manager. You know, now that we've got a living, breathing prospect, to me it's always very important to analyze the mortgage managers that you're dealing with and diligently manage these guys. You know, through the grid we see how many phone calls are made to customers and follow-ups. We see how many phone leads they take, how many internet leads they take, how many get canceled, closed, funded, what the fallout rate is of mortgage managers. If any mortgage manager is having a problem, they're always highlighted. Okay? And we diligently measure the effectiveness of mortgage managers. You know, the mortgage industry is a formula now. Okay, it doesn't matter who you're talking to, you're going to be qualified based on your credentials and not something that someone can actually do for you or not do for you. You can never talk someone into getting a mortgage. They can't give it to you because they like you. They can't even give it to you if you got $1 million in the bank if you don't meet the other criteria. So it's very critical to make sure the guy that you're dealing with knows exactly what he's talking about and that he's effective, and we measure statistics on every mortgage manager that is involved with the grid. Hopefully you had a great conversation with the mortgage manager and now you have actually applied for a loan. Okay, once you apply for the loan, you're going to receive a welcome email and a visibility portal which will allow you to real-time monitor all the critical benchmarks that have to do with your mortgage. You'll receive a dashboard just like this. You'll see when your insurance comes in, your title, your taxes, your payoffs, your appraisal. You'll always know if it's pending or if it's approved with conditions. You're not going to have to call these mortgage guys 3 or 4 times. I mean, once you have to call somebody 3 or 4 times to find out little things, everybody hates each other's guts. And the problem with this industry is, if you're buying a house, it's pretty important to know that you can pack the trucks. And it's also important that someone can tell you to pack the trucks, but maybe not quite pack the beds yet because there might be a problem. And in our industry, typically you see that stuff the day before closing, and you find out when it's too late, as opposed to as things happen, so that you can prepare and make adjustments. For additional protective measures, everything is paperless, everything is encrypted documentation, and all email communication around your particular file is done within the system. So to create accountability and eliminate liability, there's a permanent email record associated with every single file, and so that there's a track record of what's going on. And that's very important, because a lot of times mortgage guys will try to make you pay for a lock extension because of problems that may or not be associated with you. And in this particular case, if there are problems with the file, it's documented, it's outlined, and it protects everyone involved. The mortgage managers, they have the ability to review the documents and forward the documents, but they can't manipulate the documents. There's a permanent document record on every single file, and it's completely paperless. The mortgage and title industries are the most paper-intensive, fragmented industries, and if we can consolidate things, we can make it paperless workflow. And we need to protect you guys. You're providing so much personal information that you're at risk, and being able to drill in paperlessly to any transaction and eliminate the risk of identity theft with encrypted documentations and data integrity. It's just the only way to protect consumers, consolidate documentation, and hopefully start to make an impact on our forests throughout America, and of course the rainforests. Not only on the grid are we constantly comparing the performance of mortgage originators, but we are comparing every mortgage company that participates on the grid and working them not against each other, but analyzing them, working for the consumer to make sure that they're always dealing with a qualified person. So we can take any 2 mortgage companies on the grid. We can compare them based on total new deals, what gets funded, what gets canceled, what their fallout rate is, and measure efficiencies, and ultimately determine if a mortgage company is able to retain their grid certification and continue to operate under the standards that we're putting in place. In the mortgage world, when you're talking about customer service initiatives, if this were a mortgage manager's dashboard and these are all his customers, every one of these customers have already said yes, okay? And it's hard for them to get the service level that they need if the mortgage manager is spending all of his time chasing down different components of every single transaction that he's working on, when really what he can be doing is working on initiatives to help customers save money, get the best rates, and be prepared for the challenges of the mortgage industry. That doesn't work if somebody's got to make 400 calls a week for customers that have already said yes and chasing down documentation. So we've given them a platform to maximize customer service so they can spend their time working with the customers and talking about what I consider to be more important things like rate analysis, income analysis, forecasting, what's going on with the market, and being able to anticipate changes that we all believe will negatively impact potential mortgage scenarios. So one of the key things within this is a multiple range of tools that inform customers on what's going on. If you want to take a look at different rates or different mortgage products or different property values in your region, if you want to look at adjustable mortgages, okay, you can take a look at 5-year ARMs, you can look at the last 2.5 years, you can analyze and make effective assumptions on which way you think that this is going to impact you or not impact you when you make your mortgage decision. And it's up to me to make sure that the mortgage managers have the tools and are willing to engage you and properly educate you on certain market variables that are going to have to do with your successful transaction or not. One of the other things that I wanted to do is I wanted to create some models that I felt would protect consumers over time. This particular model, in my opinion, might have saved a large amount of the crisis that was caused by the mortgage industry. This is an adjustable mortgage model where you can show a consumer what they currently have on their adjustable mortgage. You can talk about how their current loan is going to look after their arm were to adjust. You can talk about what their new loan would look like if it were redone at a fixed rate today. And then you can put in a bunch of hypotheticals to show people how their adjustable mortgage may or may not impact a future purchase or a future refinance, and whether or not that consumer might have to actually write a check just to refinance. And you can take educated variables from the Treasury Index, from the LIBOR Index, cross-reference that with property values in a consumer's region, and then make an educated assessment on whether or not an adjustable mortgage will work for you, or whether or not you think it's going to be a bad idea based on your long-term plans and your long-term goals of your family's personal economy, so to speak. You know, when you're talking about consumer protection and making sure that mortgage individuals and mortgage companies operate under the standard required by GRID certification, one of the additional things we do is we measure every company and every individual's fallout statistics, not only based on the month, but based on the number of days in which loans are falling out, and we can learn things about how to more effectively service our customers by using data and reports to manage these guys. You know, I used to compete against these guys, and I know what it takes, okay, to run a successful mortgage operation and be scalable. With Lennox Financial, I think even last year, one of our worst years ever, we still did 1/10 of the business that City Mortgage did, but they did it from 1,297 locations, and I did it from one location in Atlanta, and used these technological, if that's even a word, I guess utilize this technology to make sure that we keep consumers safe, and that I can make these mortgage companies answer to a standard. So now we find ourselves back here. You know, hopefully the loan is closed. You know, the system sort of ends up where it began. We paperlessly complete the circle from the customer to the mortgage companies, to the title companies, and give you full visibility and paperless transparency the entire way. And the process ends with you receiving a thank you email and a permanent document storage center where you can permanently have access from now until eternity to all the critical documents that have to go with your closing, whether it's your HUD policy, your payoffs, your taxes, your insurance, everywhere that you'd like to keep things protected and in one place that very few people actually do, you've got it right here. And where it always ends up is me kind of monitoring the industry like a satellite view of the United States, every company that is doing business on the grid, and then you can go in and you can begin analyzing those companies, their regions, their districts, their branches, ultimately the mortgage managers within a branch, and their performance statistics. And so I want to thank you for putting me in charge and letting me create a standard that this industry hasn't seen before. And if we can work together, if America will go to the grid first, you're going to get a mortgage no matter what happens. But if America will go to the grid first, then we can help to create paperless standards, get this industry on track. It's just too fragmented. It's just too small on an organic level and too fragmented. There's too many 5, 10, and 20-man companies out there that do not have the resources to spend millions of dollars on technology the way that I have to protect consumers. And if you guys will trust me to do it and manage the process, then I'll do my best to keep you safe in the mortgage industry. Yeah, I appreciate you taking the time to look at this, and I'm here to protect you. You know, I've jumped on the other side of the fence. I've always protected consumers from day one. I came out of the gate with no closing cost mortgages, and now I'm really trying to create a standard throughout this industry. And if you guys will trust me, then I will manage the entire process, and at the very least, I'll keep you safe. I can't guarantee that you're going to have the best experience on earth, because problems in this industry are usually exclusive to each customer. However, I will create an overall standard, and I will do my best to make sure that we can eliminate identity theft and we can protect consumers. And in an industry that's become commodic and organic, okay, it's important to apply technology to an industry that sort of watched the technological revolution go by. And protecting consumers, that, my friend, is the biggest no-brainer in the history of Earth, and I hope you do business on the grid now and for years to come. You know, for me, all the craziness starts in the bald berry. Then I go ahead and identify the 15 things that I need to do to get to come up with the result that I need to have. And then what are the 15 things that we have to come up with to maintain a successful result? And hopefully this platform is going to assist you the way that it's helped others and billions of dollars worth of mortgages and consumer protection platform.